Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Nvidia beats forecasts, but investors shrug, raising fresh doubts about whether the AI boom can keep powering the markets. But despite the muted response, Asian shares extend their gains to a fourth straight day as turmoil driven by concerns over the impact of AI eases. And the U.S. and Iran are set to resume nuclear talks later today amid fears of renewed U.S. strikes if the two fail to reach an agreement. It has just gone 9 a.m. across the Emirates. I'm Joanna Versace in Dubai. Well, first of all, let's start with those Nvidia earnings because they actually were pretty solid. You had a revenue beat, you had a beat on data center revenue, the margins all in line, and yet somehow you had a very muted response in the after hours with extended trading, which tells you that, once again, to quote our MLive strategist, maybe some of the concerns around AI have been eased, but not necessarily erased. So this is the setup that we have this morning. S&P futures down about 0.2%. So leaning towards the red. The same thing can be said for the Nasdaq as well, leaning slightly negative, despite a better recession in Asia. We'll get to that in just a moment. One statistic that I just want to give you, by the way, on the subject of tech companies and Nvidia's reporting. This is per Bloomberg intelligence data. 90% of tech companies who have reported earnings have posted a positive surprise. That is the highest of any sector versus the average of around 74%. So what's actually happening is earnings in the tech space have been positive, but negative sentiment has been overwhelming that part of the market. Very interesting to note. Dollar yen also in focus. There's been quite a lot of activity going on around the yen the last couple of days, especially with the appointment of those two dovish members to the Bank of Japan MPC voting committee. Today, though, what we are seeing is a bit of strength for the yen versus the USD. The USD continues to lose ground versus other Asian currencies as well. So keeping a close eye on that currency pairing. And then Brent also sitting at $71. It's going to be a big day as far as geopolitics are concerned. That third round of negotiations between Iran and U.S. taking place in Geneva. We'll see if we get a breakthrough. But I've got to say, expectations are very, very low for something really substantial coming out of those discussions. And let's switch over. I just want to say one more thing about Nvidia before we push on and talk more in detail about the earnings that came through yesterday. Take a look at the white line, which is essentially Nvidia versus the semiconductor index, the SOX index in the U.S. And you can see that, as we've been talking about day in, day out, this year has been the year of chips, chip makers, chip technology, memory chips, and actually Nvidia, which is the poster child for many of these high advanced GPU chips that go into AI and AI compute, have been trading sideways. So it hasn't been a great start to the year for Nvidia. Sentiment has been pretty skeptical around the upside for the stock, where we have seen a lot of love has been in the chip makers themselves. So I think that lends itself nicely to talk about how markets in Asia are faring. Min Lo is in Hong Kong for us, and perhaps you can talk to us about the impact that the Nvidia earnings is having on some of their key suppliers in the region.
Yeah, and you can see on the screen here the Nvidia suppliers, the major ones across Taiwan and Japan, are seeing a downdraft across the board. And that's probably because a lot of the high expectations had already been priced into markets, and there's a bit of profit taking that is going on. And it also shows you that it's increasingly becoming very difficult to satisfy investors' expectations. I think the only exception is the Korean semiconductors. If you flip the board, you have Samsung, SK Hynix. These are two key suppliers of Nvidia as well. Hanmi is a supplier of SK Hynix. These are still performing very well, really solidifying the idea that these Korean semiconductor names are really untouchable. And that's because Samsung and SK Hynix, along with Micron, are the three major suppliers that make the DRAM chips, which are in short supply. And they really have been quite insulated from the AI scare trade so far. You take a look at broader markets in Asia, though, it's broadly on the upside today, but you can see that there is a cap to how much the TAIEX can gain as well. It's been overbought if you look at the RSI over the last 6 sessions or so. The Nikkei is also pretty much flat, but the Kospi has been still that standout index in Asia above the 6,200 mark, now hitting another record high.
Min, thank you so much. Min Lo in Hong Kong. Let's talk more about those earnings then. Nvidia has failed to impress investors with its latest sales forecast, signaling that concerns about an overheated AI economy will continue to dog the company. This despite the chip maker delivering a first quarter outlook that easily beats the average estimates. Bloomberg Asia tech correspondent Annabelle Jewellers joins us from Hong Kong. So I ran through some of the top line figures and the fact that we did get a revenue beat. We got a revenue from data center beat, margins all in line. Why were investors unimpressed, Belle?
Yeah, I think it sort of speaks to what has been quite a consistent narrative over the past few quarters, which is that we go into these earnings, we very much have the expectation that Nvidia is going to be surpassing Wall Street estimates, but it still doesn't reach the loftiest of projections. And that's exactly what happened this time around, because the highest projection for first quarter sales was at $80 billion. And the company, of course, guided for $78 billion. Even though that was ahead of estimates, it didn't meet, as I said, that loftiest projection. And so investors are disappointed. But I think, as you referenced, and we just heard from Min there as well, that this sort of very much a trading range that Nvidia has been stuck in going back over the past few months, where we really haven't seen it breaking out in a sustained direction on either side. And I don't think it's just that story around the concerns around the AI bubble. Of course, this came up during the earnings call. Jensen Huang continued to rebuff those fears. Not just concerns about that, but also around Nvidia's sustained position in the ecosystem, because obviously it's been very central, as you said, to hyperscalers and on the training side. But what about the inference as we actually move to that deployment of AI technology through the ecosystem? Will Nvidia's chips continue to be key, particularly when you see the likes of AMD, for instance, trying to muscle in on its territory, and as well the hyperscalers investing in their own semiconductor technology?
Yeah, and a case in point, that big deal that AMD inked with Meta yesterday. China, also a big question mark for Nvidia. Did we get any guidance as to whether they're actually going to start to be able to sell some of their chips into China?
Not really. I think that is certainly one of the big unknowns still. I mean, of course, China doesn't account or hasn't accounted for any sort of revenue over the past several quarters. And that's exactly what they sort of continue with. They're still not baking in any projections to their first quarter outlook. Yes, they did nod to this. They made the point, for instance, that they did get in a separate filing. This was, but they did make the point that they actually do have the license now from the US to export a small number of H200 chips to China. But it's still that key question around what is the response from Beijing, and will they allow the chip companies or the tech companies rather in the mainland to purchase that technology? Of course, we hear a lot of story about chips that are available through other covert means, for instance, but actually, of course, buying them through proper channels would be preferable, and preferable as well for Nvidia, of course, because then it can actually start to generate some revenue. But yes, they didn't bake any assumptions into their guidance, as I said, and they haven't generated any revenue under the H200 licensing program thus far.
Annabelle, thank you so much. Bloomberg Asia Tech correspondent Annabelle Jewellers. Well, for more on how markets are reacting, Bloomberg MLife strategist Mark Cranfield joins us from Singapore. Well, Mark, I was just pointing to perhaps the more cautious setup that we have for U.S. futures going into the session today. And how are you reading the knock-on effect that Nvidia is having on some of these key chip makers, chip suppliers, and the partners of Nvidia in the region as well?
Well, it's certainly doing nothing to hurt sentiment, especially in Korea, as Annabelle was saying earlier. There's a big interest now in what's happening with the Korean companies. You've had a tremendous change over the past year or so. You have people like Nvidia, the other big tech companies in America, the so-called Magnificent Seven. They seem to be the only story in town. Everybody wanted to be involved in that, and that was the key story for global investors. Fast forward to today, and you can see that there's massive demand for people like Samsung, SK Hynix, Taiwan Semiconductor. These stocks are where people want to be. They've also got potential currency appreciation as well. They're seen as being relatively undervalued on a global basis. So when you get a slight stall in the Nvidia story, there are so many alternatives. And today we're seeing Korean stocks again up. We had one of your fellow anchors, David Ingalls, was saying earlier that if it continues on this path for the next few weeks, the Kospi index will have risen 3 times in value over the past year alone, which is really quite extraordinary for what is now the 9th largest market in the world by market cap. So you have better alternatives, or at least you have very serious alternatives in other parts of the world. And that's where people are looking for the upside, and they can from that point of view, they don't need to concentrate so much on people like Nvidia and Meta and Alphabet, those kind of companies.
Yeah. To your point on Kospi, I was reading yesterday on the terminal, you just said 9th largest market value, but it's also now surpassed the market cap of both France and Germany. So it tells you a lot, again, about where the interest is from the investment community. But we've been so far talking about equities and the equity outperformance, but we're also beginning to see it transpire in Asian FX currencies as well, that strength versus the USD. And on back of that, it's quite difficult to see a sustained bid for the dollar emerge here, isn't it?
Yeah, we're now getting a much broader scope of currencies which are competing against the US dollar. And today in particular, it seems to be being led by the Chinese currency. The yuan is exceptionally strong. The fixing today, which is watched very closely by FX traders, the daily dollar yuan fixing was set at the lowest level for nearly 3 years. That was another signal that the central bank in China seems very comfortable with a strong currency, and that's drawing in the other regional currencies which are nearby. So the Korean won, the Taiwanese dollar, the Malaysian ringgit, the Singapore dollar, they're all being pulled in the same direction as the Chinese currency. And so that's helping to help the euro and the Aussie dollar also perform as well. So you've got a situation where even the offshore yuan has been trading a little bit stronger than the onshore for a few days. And yet the central bank is pretty comfortable with that. That's something they have fought back pretty aggressively in the past, but they seem to be more relaxed about it. That's another signal that the Chinese authorities, they're pretty happy with the direction the yuan is taking. They don't mind a strong currency at all. They like to see the foreign investors bring in more money. It's a way of attracting flows into other Chinese assets as well. Yeah. So China's in a strong position. It's bringing in the other Asian currencies, and that's a big detriment to the US dollar.
Yeah. Okay. Bloomberg MLive strategist Mark Cranfield, thank you. We are also going to be joined in a few moments by HSBC, who will be speaking to us about their outlook for the dollar as well, as uncertainty grips markets once again amid the U.S. Supreme Court's tariff ruling. That's coming up next. This is Bloomberg. Well, the dollar weakened for a second day as traders weigh geopolitical tensions in the Middle East and the impact of U.S. tariffs on global trade. Joining us now is Paul Mackel, HSBC Global Head of FX Research from Hong Kong. Paul, good to have you with us as ever. Let's just start with going all the way back to Friday, which feels like a really long time ago now. But the SCOTUS ruling on the Trump administration's use of reciprocal tariffs shot down Trump over the weekend, reintroduced that blanket tariff. I mean, how is all of this going to influence the trajectory for the USD?
Well, look, I think markets, or the currency market at least, has been digesting this probability for a good few months. I mean, ever since early November, when we got a sense of the reaction by the conservative bloc on the court being somewhat skeptical. As I said, I think the currency market has been pricing this in. But nonetheless, it still plays to this idea about policy uncertainty around the dollar being relatively elevated. And as long as that's the case, it's going to keep the dollar in a soft position. I mean, that's our central view for the next few quarters.
Yeah, but at the same time, isn't positioning quite short on the USD given the price action over the past year? And I just feel like sentiment, whenever I speak to anyone, is resoundingly negative on the dollar.
I mean, it's a good point. I mean, if you do look at some of the positioning indicators, namely from the CFTC as an example there, you're absolutely right. I mean, the positioning does seem to be quite short the U.S. dollar. But to change your thinking around the currency is quite difficult. I mean, of course, there's the risk of a squeeze, and that currency, the dollar that is, could trade well. But I think that would be temporary. I think the bigger picture framework for the U.S. dollar is still that it's going to be in a soft orbit for quite some time.
Yeah, Paul, have people been looking at geopolitical hedges just because we're heading into a really crucial couple of days when it comes to the Middle East region? Trump has to make a big decision about what to do on Iran. And typically what happens in those scenarios is you see a bid for the USD emerge. I mean, how is the feeling this time around? Would you expect to see that bid if something major does happen? Or are investors looking for other safe haven alternatives here?
I think investors are generally quite puzzled about geopolitics because we've had a lot of events over the last few years. and the impact on the currency market has been quite fleeting. So it comes down to your framework and how you approach it. I mean, of course, maybe the market will start to get a little bit more sensitive, as you said, over the coming days, and perhaps the dollar could benefit marginally because of the positioning issue that you highlighted. But nonetheless, I think you go back to the idea of the framework. You need a big spike in volatility, cross-asset volatility, to really give a strong dollar signal playing out. But if that's not the case, then you might get a flutter of excitement, but then the dollar starts to sag again.
Yeah. Okay, let's talk about one of the relative flutters of excitement, the yen and the price action there, because again, it felt like the setup was really short going into those elections a couple of weeks ago. And then since then, the yen has caught a bid. But again, it's struggling to maintain a sustained momentum. Lots of talk about the new members of the Bank of Japan committee, what the Bank of Japan are going to be doing. How do you see the outlook for dollar yen from here?
Well, it's still quite caught between a rock and a hard place for this currency. I mean, on the one hand, we start to get a bit excited about the stronger mandate for the Prime Minister. Perhaps there could be not as a fiscally loose policy in some ways. But on the other hand, you start to read the local press and you're thinking that maybe there's going to be some pressure on the central bank to not to be as forthcoming in terms of rate hikes. And that starts to put downward pressure on the currency again. So we're caught in this tricky situation that I think investors are trying to understand. But we don't have the ingredients for the Japanese yen to really have a sustained recovery. For that to happen, we would need the Bank of Japan to really be on a hawkish footing, and that doesn't seem to be the case.
Yeah, but perhaps that is not the case for other Asian currencies out there, as I was just speaking to my colleague Mark Cranfield about. I mean, to what extent is the appreciation or the Chinese authorities allowing for CNY appreciation benefiting other Asian currencies in the region?
Well, there's probably some spillover in certain ways, but maybe not as much as what we're accustomed to think, right? I mean, on the one hand, a currency like the Korean won is typically quite sensitive to how the renminbi can trade, but on the other hand, it's been probably more correlated with how the Japanese yen has been weak more recently. But nonetheless, I think you're absolutely right. I mean, if the renminbi is going to keep strengthening, which is one of our core views, there's got to be some positive spillovers to the region's currencies altogether.
Paul, thank you so much. As ever, really good to chat to you. HSBC Global Head of FX Research, Paul Mackel. Well, coming up, the U.S. and Iran are set for a third round of negotiations today as the Trump administration levels new sanctions on Iran's missile program. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The U.S. and Iran are headed into another round of talks later today in Geneva. The meeting between Iran's Foreign Minister Abbas Araghchi, U.S. Special Envoy Steve Witkoff, and Trump's son-in-law Jared Kushner is set to focus on nuclear talks. But the Trump administration is also demanding Tehran curbs its weapons program.
The negotiations tomorrow and the talks tomorrow will be largely focused on the nuclear program. And we hope progress can be made, because that's the president's preference, to make progress on the diplomatic front. But it's also important to remember that Iran refuses to talk about the ballistic missiles.
Joining me now is Patrick Sykes, Bloomberg's Middle East breaking news editor in Istanbul. Patrick, well, today is the big day. Marco Rubio there is saying that the talks will likely be centered around Iran's nuclear program. Talk us through the respective positions of Iran and the U.S.
Yeah, we're still at the rhetorical level seeing this fundamentally incompatible clash of positions, right? Iran's saying that it's an absolute red line, that it has to retain some kind of enrichment. It's happy to talk about perhaps the level, the location of what's been enriched already. The US occasionally still sticking to that A, zero enrichment line, and B, as you saw with Rubio there, that they want to expand the talks beyond nuclear to the missile program as well. That, again, is another red line for Iran. It's still hard to see how they reconcile those, and that matters today, because if you take Trump at his word, this deadline he'd given of 10 to 15 days for Iran to reach a deal, that 10-day point is on Sunday. And with the rate of talks that we've had so far, we've had around every kind of 7 to 10 days, it doesn't look like there's time for another round that would fit in that timetable. So if we take Trump at his word, it's really make or break in Geneva today.
Yeah, most definitely so. Patrick, I also want to draw our viewers to a story that we published today, including a lot of satellite imagery suggesting that Iran actually is looking to once again fortify and rebuild up some of those key nuclear sites, i.e. they also are preparing for the possibility of, one, an actual limited military strike from the U.S., and two, no full relinquishment of their nuclear program.
Yeah, exactly. No, that was a really interesting analysis, in part because it also rubs up against Trump's line that he'd completely destroyed those nuclear targets in the culmination of the June war last year. So yeah, it shows that Iran's rebuilding, reconstituting, fortifying, so any future attacks will be harder. It's already a program that's famously dispersed around the country. It's partially buried under mountainous terrain. And all of that has got a feature in Trump's calculation and his colleagues as they're weighing the risks and merits of any potential strike, because they've got to think not just, okay, will we be able to destroy a target today at the point of the operation, but what happens tomorrow? Will Iran be able to reconstitute? Does it have the will to reconstitute and the capacity to do so? Those images that we've seen overnight suggest that following the June war, they still do have that capacity and certainly have that will. So Trump has got to think that any future operation of that sort has got to be bigger, but also still, would it be enough to long-term change that calculation in Iran to not try and rebuild in future?
Yeah, I think you mentioned two important terms there. One, they have the capacity to rebuild, and number two, they have the willingness to rebuild as well. Exactly. Patrick Sykes, thank you so much. Bloomberg's Middle East breaking news editor in Istanbul. And a quick look at equity futures before we head to the break. There is red on the screen for S&P, for NASDAQ, and European markets also pointing to open down in the red as well, down about 0.2%. Well, coming up, South Africa's latest budget is being seen as a turning point for the country's public finances. We'll speak with Kgothatso Baloyi, trading structure at RMB, next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Nvidia beats forecasts, but investors shrug, raising fresh doubts about whether the AI boom can keep powering the markets. But despite the muted response, Asian shares extend their gains to a fourth straight day as turmoil driven by concerns over the impact of AI eases. And the U.S. and Iran are set to resume nuclear talks later today, amid fears of renewed U.S. strikes if the two fail to reach an agreement. It's just got 9:30 a.m. across the Emirates. I'm Johanna Bersachi in Dubai. Well, the setup going into the U.S. session and European session is pretty negative, as you can see from the screens behind me. S&P down 0.2%, the Nasdaq down 0.3%. Investors really focusing on those Nvidia earnings. And even though they came in pretty solid and actually guided well, there wasn't enough in the street, perhaps, to keep the street satisfied. And so in extended trading, initially we saw an uptick in the stock. It was up 4%, then it was down a couple of percent, and basically ended extended trading around flat. But the setup going into U.S. is pretty negative on back of Nvidia. So we'll keep an eye out on that. Dollar yen, we've been talking about the yen continues to gain a little bit of ground versus the USD here, just shy of 156, about 0.2% firmer. But the broader story is one of dollar weakness, especially versus some of these Asian currencies, with as well the great performance of some of these key Asian indices. We've been speaking about the Kospi, the stellar performance there, and how it's actually surpassed France and Germany in terms of size and market cap. Similar outperformance coming through from Taiwan as well. So the chip maker trade still very much intact when it comes to some of these Asian indices. And then Brent this morning is trading up 0.4%. Geopolitical sensitivities very high ahead of those negotiations once again in Geneva between Iran and the U.S. And overnight, the U.S. have said that they've sanctioned another 30 entities that are linked to oil and weapons exports from Iran. So applying a little bit more pressure on Iran ahead of those negotiations later today. And then switching over to talk about Nvidia, our one major focus of the day, just to highlight for you that Nvidia stock actually hasn't done that much throughout the course of 2026. Year to date, it's only up around 3-4%, sort of flat lines versus, of course, the stellar performance that we had last year. And it tells you that, once again, the broader index, the semiconductor index, the SOX index, has been outperforming Nvidia because some of those other chip makers are gaining some ground, and some of them don't even make the GPUs that Nvidia do. They're really focused on memory chips, and that has been a big theme for the market this year, the shortage of some of those memory chips. So important chart to note there. Okay, let's also check in on how markets in Asia are faring. Min Lo is in Hong Kong for us. Min.
Yeah, as you said, despite those blowout earnings from Nvidia, we are still seeing some of these Nvidia supplier stocks in Asia mostly sliding, with the exception of Korea. SK Hynix and Samsung gaining and helping to lift the Kospi up 2.5%, hitting another record high above the 6,200 handle, I believe, for the first time. We did have the BOK standing pat on its rates and also signaling that it will leave rates unchanged for the next 6 months. The BOK also raising the forecast for GDP growth as well as inflation. And so we are seeing a bit of strengthening of the Korean won here, just a touch against the USD. Also some movement in the bond market, bond futures gaining as well. We already have been seeing, by the way, the spread between bond yields as well as policy rates, and that gap is now closing after the BOK decision. The Kospi, of course, really the outperformer in Asia. But you flip the board, we're also watching lithium stocks because Zimbabwe, which is one of the world's largest contributor to lithium, about 10% of lithium supply comes from Zimbabwe. The country has announced that it's banning lithium concentrate exports, and that's caused a jump to lithium prices. And here you can see the lithium stocks gaining in China, and some of the downstream clients that rely heavily on lithium, like CATL, the battery maker, Sungrow Power Supply, declining by about 5% or so.
Min, thank you so much. Min Lo in Hong Kong. Well, South Africa's latest budget is being seen as a turning point for the country's public finances. Finance Minister Enoch Godongwana says debt will peak this fiscal year for the first time in nearly 2 decades, while the deficit narrows and bond issuance is reduced. Markets responded positively, with the rand stronger, bond yields falling, and equities hitting record highs. For more, we're now joined by Kgothatso Baloyi, trading structure at RMB. So pretty positive price action that we had already on the back of the budget yesterday. Would you say that the debt trajectory that the finance minister presented yesterday marks somewhat of a turning point for South Africa and its economy?
Thank you, Jumania. So actually yesterday's budget was quite a good one, and the danger with going into yesterday's budget was just markets actually overrunning themselves. So pricing in quite a good budget where you end up with a good budget really disappointing. So yesterday's budget was quite a good one, and market is really taking it quite well. The 3 key things that stood out for me in that budget is one, and mainly on the macro side. Number one is just the narrowing deficit. So we saw narrowing deficit of about 4.5% GDP, which is also projected to be 3.7% in the next financial year. Another key factor that stood out as well is just the debt trajectory. So we saw that debt is meant to peak at about 78.9%, and then again going down in the next fiscal year to about 77.3%, which was quite a good one for South Africa. And then another thing is the growth. I mean, we are a country where a few years ago we faced a technical recession, and now we're looking at about a 1.6% growth this year, followed by a 1.8% growth in the next fiscal year, and then a 2% growth in the long term in 2028. So that's quite a good budget that we're looking at, and I think market is really taking it quite well. We're seeing dollar rand at about 15.85, coming down quite well. The debt trajectory in that instance, I mean, there's quite 3 factors that are driving a consolidation of debt. The first one we're seeing is just inflation.
We'll get there
is
in a
coming
second.
down.
Yeah. We'll get up on the debt trajectory, but I do just want to ask you also whether a lot of the good news that's baked in this budget can be attributed to just cyclical factors and the fact that we have seen such a huge upswing in commodities prices, which has benefited miners, the price of gold. Can we expect these good days, quote unquote, to continue, or is it just a cyclical feature?
So there is a cyclical feature to it, right? So we have gold. South Africa is a big exporter of gold, and that's doing quite well, which is seen in the corporate income taxes and revenue. So the one key thing that the National Treasury needs to look at now is the containment of debt going forward. So if National Treasury can contain debt and also contain their spending, this can be seen as a turning point for South Africa going forward. So yes, I do see that if we handle the revenue that we currently have quite well, we see a good trajectory for South Africa.
Do you see any possibility for some of the credit rating upgrades to come through on the back of this budget?
So last year we did have a credit upgrade, and with the current trajectory, we are looking at probably a reconsideration of another credit upgrade. So I do see us doing well in terms of that. The issuances, a reduction in issuances of the bonds does fare quite well for the South African government and also for the South African economy. So that does warrant another probably credit upgrade in the near future, yes.
Okay. And, you know, one of the comments that has been leveled on the back of this budget is there's obviously been a great focus on balancing the budget, bringing the public finances back in order. Has there been enough emphasis on kickstarting the economy and on investment pledges that will actually stimulate growth in the future?
So the finance minister did mention an investment of about R1 trillion into infrastructure spending. So we are looking at electricity, which has actually quite improved in the past year or so in terms of the production of electricity. We're looking at infrastructure when it comes to water, and that is quite a big one in terms of the South African economy. So a big investment into infrastructure means more jobs, means higher personal income taxes for the government. So we do see the economy, the National Treasury actually investing back into the economy going forward.
And you do believe that this debt profiling that the finance ministry presented yesterday can actually be adhered to over the medium term?
I mean, given what has happened in the past year and how well they've turned around the budget in terms of debt, I do think that it's possible that we see it going forward. The finance minister also mentioned an anchoring of debt, which will be spoken about in the next medium-term budget policy statement. So I'm looking forward to seeing what the policy around anchoring of debt and anchoring of spending actually looks like. And if that looks good, I mean, we see going forward a good trajectory for the debt profiling of South Africa.
Kgothatso, great to have you with us. Kgothatso Baloyi, trading structure at RMB. Thank you. Well, coming up, Israeli Central Bank Governor Amir Yaron praises the resilience of the economy. We hear more next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Saudi Aramco has cancelled some deliveries of liquefied petroleum gas for the next few weeks after a support structure collapsed at its Juaima facility. The incident is set to cause tighter supplies of propane and butane, fuels used to produce chemicals, synthetic materials, and as a cooking gas. Aramco says the scope and duration of the impact remain under evaluation. Israeli Central Bank Governor Amir Yaron says the economy has shown great resilience since the war began in October 2023. Speaking at Bloomberg's Future of Israel's Capital Markets Forum yesterday, he added that one of the main drags is missing workers affecting the labor market.
What the markets are telling us is that they're at least saying Israel's geopolitical situation is much better, and to the extent that you think markets are forward-looking, it's telling you a lot. So that's in terms of financials, fiscally, I said we were always, or Israel in the last 15 or so years has shown great responsibility in terms of its fiscal performance. We've brought our debt to GDP from about 100% to 60%, and that was just prior to COVID. And I was one of the people who advocated, let's use that space in COVID, and I think that was true. And then it went up to about 72, 73, and then it dropped to 60 prior to the war. And in the war, in 2024, it went to about 67. It's now at around 68.5. And it was and I got to give the government here credit, or I'll give myself credit in a back way, in the sense that they listened to what I told them to do, okay, which is to do fiscal adjustments. In 2024, when we thought the war was going to end in the second part of 2024, we said it's okay for debt to GDP to go up. And I was talking to investors almost daily. Yeah, we have a game plan. Once intensity will come down, debt to GDP will come down. And so we did fiscal adjustment of about 1%. In building up the 2025 budget, it was clear the war was going farther, more expenses. Debt to GDP went to 69%. And the government did another set of fiscal consolidation of about 1.5% of GDP.
That was Amir Yaron, the Israeli central bank governor. Now, India and Israel are strengthening ties in the areas of defense, trade, and counter-terrorism. Indian Prime Minister Narendra Modi is making a rare visit to Israel, his first in 9 years. Addressing Parliament, Modi said a strong defense partnership between the two nations is of vital importance in today's uncertain world. For more, we're joined by Bloomberg's Dan Williams. Dan, talk to us about Modi's visit to Israel. What more came out of it?
Well, as you noted, this visit is a big deal, a bonanza of mutual goodwill. It's still underway. It's now entering its second day, after which the Indian Prime Minister will be heading out. It's his second visit to Israel in just under a decade. It's significant because Israel has yet to emerge from its war footing. Gaza is in a state of fragile ceasefire. There could imminently be another flare-up between Israel and Iran as part of that confrontation between Iran and the United States. But nonetheless, and this has been reflected also by comments such as those you aired by the Israeli central bank governor, Israel is really doing its best to signal economic resilience, and that's being picked up abroad. So while both sides are publicly emphasizing the positive sides of this relationship, the trade boons, the fact that Israel is expected to be the westernmost point of a corridor across the Middle East, a trade corridor, the easternmost point being in India, the underlying this, there is mutual concern about regional or the respective regional challenges. It's worth noting that Pakistan, the traditional adversary of India, has entered a mutual defense pact with Saudi Arabia that Turkey is thinking of joining. It's quite possible what we're seeing here is rising powers in Asia and in the Middle East quietly setting up their own security axis in the hope that that will fend off what they see as respective threats in their own regions.
Yeah, reports on the Israeli Prime Minister looking to set that up. But listen, tensions are very high in the region right now. We've got a key round of negotiations taking place in Geneva. Dan, talk us through what Israel is doing to potentially prepare for what could be a broader war in Iran should the U.S. get involved militarily.
Well, the public position, as enunciated by the Israeli Prime Minister almost on a daily basis, is that Israel will respond on what is called an unimaginable scale, retaliating against Iran should Iran attack Israel. That would appear to be signaling that Israel is willing to sit this round out if the fighting, if the clash is restricted to Iran and the United States only. I don't think anyone really expects that to happen. In fact, Israel has quietly now played host to a brace of U.S. warplanes, U.S. refueling jets at Ben Gurion Airport. And this week, half a squadron, perhaps growing, of F-22s at a southern Israeli airbase. It would appear that Israel is at the very least helping out logistically with the American preparations, may even serve as a base of operations should indeed there be a US attack on Iran. Israel is weathered to these Iranian attacks. There have been 3 rounds of missile attacks from Iran on Israel over the past 2 years. And it's a fair assumption that the Iranian capabilities have been in part spent by those previous rounds of fighting. So I think the Israelis believe that while they can expect to be hit, while they can expect to be sent back to shelters, perhaps in the middle of the night, should there be that flare-up, that war, that resurgence of war with Iran is something that would be tolerable, something the Israelis can weather, especially if they see this as a necessary measure to what they would consider a satisfactory outcome of that clash between the United States and Iran, an outcome that would reduce the Iranian threat perceived by Israelis, perhaps even bring about a change of the Iranian government to one that is more friendly or at least less hostile to the Israelis, given that the current regime has had hostility toward Israel really etched in its constitution for going on 50 years.
Bloomberg's Dan Williams, thank you so much for the reporting. Well, Egypt has unlocked around $2.3 billion in IMF funding. It follows a 5th review of its extended fund facility and a 6th review of its Resilience and Sustainability Facility, RSF, arrangement. The IMF says that the macroeconomic situation has improved amid sustained stabilization efforts. But the organization added that progress on structural reforms under the program has been uneven. Coming up, a high-stakes conflict is brewing between the Pentagon and Anthropic. We'll bring you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. A high-stakes standoff is unfolding between the Pentagon and one of the world's most powerful artificial intelligence companies. In today's Bloomberg Big Take, we look at the escalating feud between the U.S. Defense Department and Anthropic over the guardrails on AI systems used for military purposes and whether the Pentagon should have unrestricted access to the technology. For more, we're joined by Bloomberg politics editor Laura Davison. So, Laura, talk to us about this growing feud between Anthropic and the Pentagon.
Yes, this has been brewing for several weeks, but really hit a fever pitch today. You have Anthropic saying that it wants the Pentagon to have guardrails on how it uses its Claude AI platform. This is one of the most advanced platforms that the Pentagon has been using, but Anthropic has warned that there's certain things that it doesn't know exactly how the AI will react and doesn't want the Pentagon to be using it because of this. It could threaten people's safety. The Pentagon is saying that it needs to have full access to these tools to be able to do what it needs to, and if Anthropic doesn't allow that full access, and there's 2 things that they're looking at. One would be basically tapping a 1950s era law that allows the U.S. military to pull in different assets for its needs. You know, the U.S. has done this in the past with regards to energy or certain different critical minerals. The other, it would be an even more extreme step. This would be labeling Anthropic as a supply chain risk. This is something that's usually reserved for companies that are linked to foreign governments, not a U.S. company, and is really seen as would be a very extreme measure here.
Okay, still, let's stick with the topic of Anthropic. Really interesting article overnight saying that they're dropping their hallmark safety pledge, which is being viewed as a dramatic policy shift in the AI industry, but also for Anthropic as well as a company.
Yeah, Anthropic is one of the most cautious and safety-conscious artificial intelligence companies. It has really been out there, in front of all the others, kind of touting this as something that's very important to them. And so, we saw even, just a couple weeks ago, one of their top safety executives leave the company, citing that they were concerned with the direction the company is going. I'll note this hasn't gotten the company in the good graces of the Pentagon. There's still this really core tension there between Pete Hegseth, the defense secretary, and Anthropic about how this program should be used. One of the things that the company has said is that this AI could be dangerous. You also have sort of a differing worldviews here as well. Anthropic has supported Democrats in the past. The CEO supported Kamala Harris in the 2024 election. It's seen as, quote, one of the more woke AI platforms, whereas Pete Hegseth is the king of all things anti-woke.
super interesting context there. Laura Davison, thank you so much. And a reminder to our viewers that you can go to today's Big Take, NI Big Take Go, to get the full article on what has been going down between Anthropic and the Pentagon. All right, let's turn to markets now. A look before we head into the European session. And there is red on the screen today. S&P futures trading south, down 0.2%. NASDAQ down 0.3%. A lot of focus on those Nvidia earnings. Pretty solid, I will say, but perhaps not enough to erase some of those concerns around AI, just easing them, is a quote that I borrowed from our MLive page, but I thought it was a good one. But that is the setup going into Europe. European futures also down about 0.2% as well. So mildly risk off. And of course, geopolitically, keeping a very close eye on how those negotiations in Geneva go this afternoon. And that is it for Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.